my friends. cmarcus here with you for the Miles Franklin channel, and a quick update today on the Federal Reserve, which, as many in the gold and silver community and Austrian economics and sound money and all of those communities have predicted for a long time, that eventually the Fed would reverse course, revert back to what they've always done, which is printing money. They see a nail, they have a hammer. And sure enough, big news this week, Fed weighs wait-and-see approach on future rate increases. As you can see, there's Jerome Powell, and the story going around, Federal Reserve officials are considering whether to signal a new wait-and-see mentality after likely interest rate increase at their meeting in December, which could slow down the pace of rate increases next year. Perhaps if there's anything surprising about this, it's that the Fed has waited as long to, at least, they have not reversed course yet, but again, the way the Fed often does things is kind of hint at them and they get released through the Wall Street Journal. So I'm assuming this isn't coming completely out of nowhere. And was interesting, again, on Thursday, stock market got clobbered. It was down over 700 points. And then, as you see, but stocks paired their declines after the Wall Street Journal reported Fed officials are considering whether to signal a new wait-and-see mentality. So, again, you see the impact the Fed has in these markets. If the Fed says they're going to print, more money flows in. People react to that. When the Fed had been raising interest rates throughout the past year, again, it's not a coincidence that this is when you finally see the real estate market slowing down, and especially the stock market volatility that has really accelerated over the past month or two. Again, this is exactly what happens when you remove the credit, for the same reason that everybody was having a big party when the Fed was printing money. Now the credit has been removed, the bubbles are starting to pop, and what does the Fed say? Time to, or not yet, but signaling we're probably going to stop reversing policy, and now we're thinking about printing money again. Again, it should not come as a surprise. One thing related to that worth pointing out, you can see here is the US 10-year Treasury yield, which had been as high as 3.26% just a couple months ago, has gone down. Quite a rally in the bond market, down to 2.88% today on Friday. And again, the gist of what's happening is that as people are selling other assets, they're going to the perceived safe haven of dollars and treasuries. Again, I think that's going to work until it doesn't, because I don't see anything safe havenish about U.S. Treasury market. We're talking about the most insolvent borrower in history. Yet still be prepared that until we reach that point where the rest of the world realizes what you're hearing about, probably been thinking about for a while, and guessing by the fact that you're on the Miles Franklin channel, into metals and concerned about these issues. So when that happens, in the short term, people will still flock to treasuries, but I do believe we're approaching the day where that changes, and certainly I wouldn't want to be holding any of this debt when that happens. So for all these short-term traders out there, perhaps there's a trade there, but if you're just looking to keep your money safe and invest for the long term, and you see the bubbles that are out there and want to be protected, again, that's why I talk so much about gold and silver. And again, everything that you bought gold and silver for is still very much intact. So again, it's perhaps a test of patience and waiting, yet certainly just in the same way we saw back in 2007, 2008, these things happen when they do. And if you do have any questions about that, as always, you can reach me at cmarcus, cmarcus @milesfranklin.com. Or you can leave your questions below. Always appreciate hearing what's on your mind. And with that said, we'll talk to you again soon. Thanks so much.